Welcome, welcome, welcome. Today, I'm going to share with you what I call the elite wealth strategy. Over the next hour, we're going to fundamentally deconstruct everything most people have been taught about money, retirement, and banking system. Yes, that's exactly what we're going to do. And before we get started, let me say this: your time is valuable. I don't take it lightly. So, for everyone who stays with me until the end, I have a special gift for you. Right now, that gift is worth over $497. But if you stay to the end, it's free for you. So now, let's begin. Now, who am I? I'm a licensed professional in multiple states. I'm a husband, I'm a father of three, and I've been doing this for several years. But more importantly, I'm someone who has lived both sides of this conversation. I know what it feels like to work hard, make money, and still not feel secure. I know what it feels like to think you're doing everything right and still realize the system was never really designed for you to win. And that's why what I'm sharing with you today matters. This is what people who are serious about financial freedom, financial protection, and financial legacy. Let me tell you about how my story began. I came to the United States in 2016, chasing greener opportunities, chasing the American dream. But when I got here, it was a grind. I worked at gas stations, I cleaned toilets, I did all kinds of odd jobs, and at the same time, I was still doing my master's degree. Eventually, I got a job in New York, and I thought, okay, now things are finally looking up. By 2019, I had a high paying contract job, I got married, I had a family. On paper, I looked successful. I was making money, but I wasn't keeping it. I looked rich on paper by many people's standards, but the truth was my financial foundation was built on sand. And that's the trap so many people are in right now. They go to school, they get a job, they put 10% into a 401k, and they hope the stock market doesn't crash the year they retire. That's the roadmap we were headed and handed. And for a while, it feels like it's working. You see six figures, maybe 200,000, maybe even a million in your retirement account, and you think you're safe. But then life happens. The market crashes, COVID hits, inflation rises, and suddenly you realize something painful. You don't control your money, Wall Street does. That happened to me. COVID hit, everything shut down, my contract job vanished in a week, just like that. And I was back doing Uber Eats trying to feed my family. I remember thinking, how can I have made so much money and I still have nothing to show for it? That was a hard moment for me because I realized I have been planning for income but not for interruptions. I have been planning for appearances but not for true financial control. And then something happened that changed everything. My dad called me one day and told me he had spoken to a guy who had put over $60,000 into a life insurance policy. Now, in my mind, I was thinking, wait, 60,000 in the policy? Are you sure this man didn't get scammed? That's honestly what I thought. Because, like most people, I believe life insurance was just for debt. That was my belief. I thought life insurance was something you got so your family could bury you one day. That was it. But my dad showed me the statement and told me to talk to the guy. So I did. And I remember being excited. I was like, wow, I want to do this. At the time when he explained the product, the IUL, I didn't fully understand it yet. And I also didn't have enough money then to really start the way I wanted. So I started with the minimum, which was a term insurance. But once I learned more, once I understood the power of compounded interest, once I understood the living benefits, once I understood the tax advantages and the liquidity, I moved into an IUL immediately. That was the turning point for me because I realized I wasn't just supposed to plan for death, I was supposed to also plan for life. That was the revelation. Not death benefit only, not just protection when you're gone, but protection, liquidity, access, growth, and control while you still live it. And that changed everything for me. So let me say this clearly. Most people think life insurance is only for death benefit, and that belief is keeping them broke, exposed, and dependent on institutions that do not have their best interest at heart. What I discovered that when structured properly, the index universal life can be used as a wealth tool, not just a death benefit. That's why I created what I call the FLIP system. The FLIP stands for financial leverage, liquidity, income, tax free protection. It's not just a product, it's a complete redesign of the way you think about cash flow, control, and wealth. Now, who is this for? Let me be honest, this is not for everybody. Sadly, it's not because some people don't have the discipline to save. Some people want to get rich quick. Some people want hype without structure. This is not what this is for. This is for income earners, business owners, and professionals who are tired of paying enormous taxes, tired of losing control, and ready to learn a better way. This is for people who want to build wealth, protect families, and create a legacy. Now, the traditional roadmap is broken. Let's talk about the roadmap. You're told to work hard, save in your 401k, trust the market, hope taxes don't go up, hope inflation doesn't crash your savings, hope you retire during a good year. That whole strategy is built on hope, and hope is not a financial strategy. This system creates the illusion of success. But the moment the market crashes, inflation rises, and your job disappears, you find out how fragile that plan really is. That's why so many people are retirement rich and still financially insecure. Because the truth is, $1 million in a 401k is not the same as $1 million in a tax free strategy. A taxable million is not a true million. If the IRS gets a cut, if inflation gets a cut, if fees get a cut, and if market losses get a cut, then that money is not fully yours. So now, what is the flip system really? Number one, financial leverage. The money can continue to grow while you borrow against it for opportunities, emergencies, or investments. That means your capital can work in more than one place at a time. Number two, liquidity. Unlike many retirement plans or real estate, this gives you access to capital without waiting on a bank, without early withdrawal penalties, and without credit checks. Number three, income tax free. When structured properly, it gives you access to tax advantage growth and tax free distribution under the current tax code. Number four, protection. It protects your family with a tax free death benefit, and it can provide living benefits if you face critical, chronic, or terminal illnesses. That is why this matters. This is not just about dying better, it's about living stronger. Now, let's talk about the income myth. Now, let me address one of the biggest lies in personal finance. People say, I don't make enough money to build wealth. That is one of the biggest lies out there. Wealth is not just about destination, it's about a habit. Your income is not your wealth. Wealth is built by consistency, not by waiting until one day you make the right amount of money. It's not about the size of the seed, it's about the quality of the soil and the consistency of the watering. The best time to plant a tree was 20 years ago. The second best time is now. That is the mindset shift I want you to live with today. Now, let me tell you about the cost of waiting. The math of consistency will always beat the math of procrastination. If you look at this, you see there are three different types of people that saved and invested. See, at 25, if you saved only $300, you see where that takes you. Now, at 35, if you start saving $950, you see where that takes you. And by the time you're 45, you have to save over $2,850 a month. So that's important. Now, someone who starts small today can beat someone who waits 10 years and tries to catch up later with a much larger contribution. If you see the path right here, you see how once you start as a child, it's the fastest path to be a millionaire by 65. If you want to become a millionaire, you can start your child or your grandchild by the age of 1 and only save $75 a month. And this goes to when you're 10 to 20 and 30 to 40 and 50. The reason why we say $1 million is because that's the basic you need at the time of retirement. That will be enough for you to cover all your expense depending on your lifestyle. Now, time matters, consistency matters. If you think about the tax drag reality, in traditional account, taxes act like a parasite on your growth. If you look at the typical traditional tax deferred system, you save today, but you pay a massive success tax on the entire balance and the principal and all the growth in retirement. But in a tax-free flip system, you use after-tax dollars, meaning you already paid the taxes, so you don't have to pay no more taxes on the growth, on the income and everything else. But every penny of growth is yours to keep. No success tax ever. The cost of waiting is one of the most expensive prices people ever pay. You can wait and hope, or you can start and build. The longer you wait, the harder the monthly burden becomes. That's why procrastination is really expensive. And if you look at this, you see how $1 million looks in a 401k and how $1 million looks in an actual flip system. There are three tax buckets. The tax now, the tax, this is where your checking, savings, CD, and many brokerage accounts live. You pay taxes now, and in many cases, you keep paying taxes on the growth. Then the second bucket, which is the tax later, this is your 401k, your IRA, your 403b, and similar accounts. You defer taxes now, but you pay later on the harvest, on the full amount. And the last bucket is the tax-free. This is where properly structured strategies like the Roth accounts and the cash value insurance can live. And this is where the conversation changes. Let me give you the farmer story. Imagine someone gives you a bag of seeds worth almost nothing and says, don't worry, you don't have to pay taxes now, go plant them. Then years later, the seeds become a full harvest worth millions. And only then do they say, now pay taxes on everything. Would you rather pay taxes on the seed or on the harvest? That's the difference. The most expensive way to build wealth is to pay taxes on the growth. The most efficient way is to pay taxes once and keep the rest. That is how wealthy people think. Now, let's talk about inflation and the silent leak. Another silent killer is inflation. People think money sitting in a savings account is safe. But if inflation is rising faster than your account is earning, then your money is losing purchasing power every year. It may look safe on paper, but it is shrinking in value. So now, money that only sits is not necessarily safe. Money should be positioned to grow. That is why this matters. Now, let's talk about liquidity. Liquidity matters a lot. Now, let me say something important. Net worth is vanity. Liquidity is sanity. It does not matter how many zeros are attached to your name. If your family cannot access what they need when life happens, what matters in a crisis is not just what you own on paper. What matters is what your families can use. That's why the debt benefit matters. That's why liquidity matters. That's why planning matters. Because when families are grieving, they should not always be scrambling. Now, this is a story of someone. Let me tell you a quick story about a millionaire. He was one of the founders of Cash App. He had over a net worth of $10 million. But when he passed away, his family was left in crisis. Because why? He had no life insurance. His brother had to go start a GoFundMe page just to cover the cost of his burial and support his family in his immediate aftermath. So that's why this is really important. So, before you can build wealth, you need clarity. That's why you need to know your numbers. You need to know what's coming in every month, what's going out every month, how much you're losing in taxes, how much is leaking through interest, fees, and inflation, and what is your freedom number. If you can't measure it, you can't manage it. Now, most people spend more time planning a 2-week vacation and planning their own financial future. That has to change today. So you have to protect before you invest, which means offense may win games, but the defense wins the championships. Before you talk about aggressive investing, you need a foundation, which means you need asset protection, you need a debt benefit, and you also need a living benefit. And number four, lastly, you need to set up a trust, which means after you set up asset protection, you set up family protection, and you can easily liquidate, then you set up a trust to protect your family from probate. That includes proper ownership structure, and in many cases, conversations around trust and legacy planning, because ownership without structure can create problems. Why? Because control matters, privacy matters, because without a trust, even if you have just a will, your will have to go through probate, and probate is court. Court is public. And you want all your finances to be private. And lastly, legacy also matters as well. That's why there are 4 steps for you, and the last step is to set up your trust. Now, I just want to put up a disclaimer. This isn't about getting rich overnight. This is how I built tax-free cash that funds my business and the future. I am not your financial advisor, your lawyer, or your CPA, but I am a licensed financial professional who's implemented this strategy successfully. Everyone doesn't qualify, and that's okay. I'll show you how to know if this is actually for you. So my goal for this web class is to discover how real entrepreneurs multiply their money in 2 places at once using a private strategy called the flip system, and to turn everyday expenses into long-term wealth. Why listen to me? You should listen to me because I am not speaking theories. I am a licensed professional in multiple states. I have implemented these strategies with families, and I use these principles myself. I don't just teach it, I live it. My transformation was simple. At first, I wanted to make money. Now, I want to make sure that I never lose it, because making money is one skill, but keeping it is another. And most people were never taught the second one. What you're looking at today on slide 24 is the belief bridge. And this is how things shifted for me. Most people believe life insurance is only a death benefit, but when properly structured, the index universal life can become tool for protection, liquidity, tax advantage growth, living benefits, and of course, a legacy. This belief bridge is when you move from life insurance only a death benefit to this can be a wealth building tool for life, freedom, and family protection. That is the shift. So now, let me tell you a quick story. This is a story of a millionaire who wasn't. Robert worked 40 years to save $1 million in his 401k. He thought he was set up for life. When he went to withdraw, the IRS took over $300,000 immediately. Inflation on the market fees ate another 150,000. And Robert said, I worked and I saved $1 million, but I can only spend $550,000. I'm 65 and I have to go back to work. That was sad. That's the consequences of putting your money into 401k and not into the flip system. Now, let's talk about the invisible drain. Is your financial bucket leaking? Most people focus on pouring more income, which is more water or income into the bucket, but they ignore the holes at the bottom. What are the holes? Taxes, interest, inflation, and fees. You have to try to stop the leak. Now, let's talk about the 4 secrets. Secret number 1, the vehicle belief shift, which is how to multiply money using the IUL, even if it sounds too good to be true. Most people don't think life insurance is just a death benefit. They're missing the most powerful wealth building tool ever created. Now, let's do a quick quiz. How much interest does the average American pay over a lifetime and over their lifetime? Is it 50,000? Is it 280,000? Bingo, you got it. It's over 600 and plus $1,000 in their lifetime. That's something to consider because between mortgages, car loans, and credit cards, most people work for the banks for 1/3 of their lives. The flip system turns you from the payer to the player. Now, let's talk about the story of 2 paths. This is a story of 2 brothers, Mike and John. Both saved $1,000 a month for 30 years. One followed the rules and the other followed the wealth. Mike, the traditional path, he said, I maxed out my 401k and hoped for the best. I lost 35% in 2008 crash. Took 4 years to recover. He also said he paid over $150,000 in hidden management fees, and the IRS took over 25% of every dollar he spent. Now he can only spend $4,200 a month. And there's the other part, which is John, who used the flip system. He said, I built a tax-free fortress I could control. He earned 0% in 2008, lost nothing. He used cash value to buy real estate in 2010. And lastly, he withdrew over 100% of his money tax-free for life. Now he has over $8,900 a month of spendable income. Now, this is the identity loss leverage. And this is where we identify lost leverage. As you can see here, if you use the bank, you miss out on tax-free income, you miss out on growth, you also miss out on living benefits. If you use a brokerage account, you miss out on guarantees, tax-free, and you miss out on living benefits. If you use a 401k, you only get the growth. You miss out on everything. If you get a real estate, you get growth, you get penalty-free, but you don't get no liquidity quick, you don't get no guarantees, you don't get no tax-free income, no growth, and you don't get no living benefit. If you use a Roth, you get liquidity, but you don't get unlimited income, you don't get living benefits, and you don't get guarantees. But if you use the flip system, the unbank, you get all these benefits: liquidity, guarantees, tax-free growth, penalty-free, unlimited, and living benefits. So let me tell you another story. This is a story of James. James was given a second chance. Why? Because at 45, James suffered a massive heart attack. He survived, but he couldn't work for 18 months. His savings were gone in 4 months. He faced a 10% penalty to touch his 401k. But luckily for him, his IUL living benefits, he accessed $250,000 of his death benefit tax-free while he was still alive. He said, I didn't have to lose my house while I was fighting for my life. That's the power of the elite wealth strategy. Now, let's talk about another secret. This is the design secret, which is the power of the flexible premiums. Now, this is an example of different premiums for a death benefit of $700,000. Now, the way it works is the maximum premium goes towards your savings goals, while the minimum life insurance cost goes towards your cost. Now, for a death benefit of $700,000 for a 40-year-old man, the minimum is $5,200, which goes towards the cost of insurance. But if he pays $12,000, he gets good cash value from that because the rest will go towards savings towards his cash. But now if he pays over $50,000 a year, his max funding his account, which means most of the money goes towards cash value, so his cash value goes even faster in the account. So now that's the power of the flexible premium. This is what happens when you deposit your premiums. For instance, you put $1,000 a month into your IUL or your product. $100 goes toward the death benefit, which is the cost of the insurance and the charges, while the remaining $900 goes towards your cash value and starts to grow tax-free. We minimize the cost to maximize the growth. That's the strategy we use to maximize your cash value. Now, you just watch your money grow safely. The historical interest earned on the IUL policy in the stock market is about 7.99%. Your money grows safely even when the market crashes. Now, there are 3 ways money grows. Number 1, in a fixed account, the principal is safe, but you lose it to inflation. While in a variable account, which is your 401k, your mutual funds and stocks, you get high growth potentials, but there's also a risk of losses. And lastly, in the index account, which is part of the elite wealth strategy, you participate in gains, you have a 0% floor, which means no losses, and your money grows tax-free. Tax strategy. Now, this is the power of the tax now, tax later, and tax-free. We've talked about this before. So with the tax now, it's called the compound killer. It doesn't let your money grow fast. While the tax later is called the tax time bomb, which means it's ticking. It might take 20 years, 30 years before it blows up. And the last is the tax-free, which is the elite wealth accelerator. And this type of products are called your IUL, your Roth. You pay taxes once, and then your money grows, and you can access it tax-free forever. Now, after learning all this, if you decided to go and move with us, this is where we ask you, what is your comfort zone? The first step is determine how much you want to save each month. It should be an amount that feels comfortable and sustainable to you. As a starter, you could do over $500, or if you want to be advanced, you can do over $2,000 a month. Consistency beats intensity. The step 2 is you set everything to autopay, which means you remove the friction, you automate your legacy. By setting the contributions to autopay, you ensure your work grows every single month without you having to lift a finger. Number 3, we automate the way you access via loans. If you need cash for an investment, a car, an emergency, you don't ask the bank for permission. All you have to do is request loan. For your policy, there's no credit checks. You receive the funds in days while your full balances keeps growing. Now, this is a loan advantage. We borrow on your terms, which means no credit checks, there's no income verification, there's no strict repayment, there's no credit privacy, there's non-recourse, which means the loan is secured only by the policy. Your assets are safe, and there's also uninterrupted growth. And lastly, step 4, we review your progress, which means there's an annual checkup with you every year. We review your dividends, cash value growth, and your debt benefits to ensure your strategy is performing at its peak. We also optimize and adjust as your income grows. We can adjust your strategy to capture more wealth and further accelerate your legacy. Now, you might be thinking, okay, what if my income changes? What then happens? That's the flexibility. A lot of people ask, what if my income changes? That's a fair question, right? Because life is not linear, so your strategy should not be rigid. If income goes down, there may be ways to adjust. If income goes up, there may be room to accelerate, right? The point is this: your financial life should work for you, not trap you, right? And the great thing is you also get paid to borrow, which means the math is like this. In the IUL policy, your money grows at 8% average every month, every year. If your money grows at 8%, you can take out and borrow at 5%, which means you still get a 3% crediting into your account. So you end the spread like the banks do, right? But the disclaimer, results may depend on the market conditions and not actual guaranteed. But the strategy over time has always been proven. Now, this is the story of Sarah. Sarah found the perfect location for her second boutique. She needed $80,000 fast. The bank offered 9% interest and a 3-week wait. So she decided to access $80,000 from her IUL in 48 hours with zero credit checks or red tape. Her full 80K continued to earn index returns inside the policy even while she was using it. She paid herself back, keeping the interest for her own legacy instead of the bank's. Now, let's talk about the second secret, which is the control belief. How to build wealth without handing over control to a stranger or a computer. Well, Wall Street wants you to believe you're not smart enough to manage your own money. They want your fees, not your freedom. Now, the secret number 3, which is the external belief. Why the wealthiest people and institutions are already using this strategy. If it's good enough for the banks and the world's most successful entrepreneurs, why isn't it in your portfolio just yet? Right? Why do the banks use it? The banks ranked by life insurance as a tier 1 capital. Wells Fargo, they have over $18 billion in life insurance, while JP Morgan, they have over $12 billion in life insurance. PNC Bank have over $11 billion, while US Bank has over $7 billion. Now, what the banks don't want you to know. Now, they take your deposits, they pay you 0.01%, and then they lend it back to you at 18 to 24%. Your savings account earns about 0.01%, while the bank earns about 400 to 1,300 spread. They aren't smarter than you, they just have a better system, and it's time you used it as well. Why are we using life insurance really? Number one, we use it as a cash value insurance for protection from creditors as well. If you owe money and someone tries to sue you, the cash value in your life insurance is protected. And In almost every state, either fully or to a certain extent, the protection is due to state and federal laws that protect beneficiaries and financial security. Now, it's not just the banks. Disney, he famously used to borrow against his life insurance to fund Disneyland when the bank said no. What about McDonald's? Rick Kroc, he used life insurance to pay for his key employees and launched the McDonald's branding. Now, even now, in basketball, Jim Harbaugh, he agreed to a compensation in the form of a multi-million dollar life insurance loan. Now, let's talk about Chris. Chris is a 40-year-old man married to Ashley. He owns a landscaping company in California. His income after taxes is about $100,000 a year, and his monthly cash flow is about $2,000. Chris wanted to balance a safe investment and growth, so we position his cash to flow through into the flip system. I know. Let's address the elephant in the room. This sounds great, why? But I know what you're thinking. You've heard these things before. You have questions. Let's address them. The four common objections I head on. Number one, fees. Number two, returns. And number three, complexity. And number four, qualification. Now, let's address them. Now, you might say, aren't the fees too high? What people call fees in one place, they ignore as taxes, losses, and lack of control in another place. The question is not whether there's a cost. The question is, what are you getting in exchange for that? Number two objection, I can get better returns in the market. Yes, you could, maybe in some years, but what happens when the market crashes at the wrong time? This isn't just about the upside, it's about what you keep on the downside of the market. That's what's really important. Now, number three, you can say this sounds too complex. This is our job. We handle the complexities. You don't have to become the mechanic. You just need to know how to drive the car. That's it. And lastly, you might ask, okay, well, what if I don't qualify health-wise, right? That's a real conversation. And not everyone qualifies the same way, but that is why strategy matters. That is why structure matters. That is why we review each case individually. Now, this is what we call the ultimate impact, and this is a generational thing, right? A grandfather can start with a small IUL for his newborn grandson, funding it with just $200 a month. At age 25, that grandson can take over from the policy with $150,000 in tax-free cash for a home down payment. And in the finish, at age 65, he retires with a tax-free income stream that his grandfather set up in motion decades ago. Wealth isn't just about what you make, it's about what you pass on. Now, what happens next? So, first, we create your custom elite wealth blueprint. If I could show you a way to guarantee your family's future while accelerating your wealth, would you be ready to take the first step? There are three things you need. Number one is the right time. That's when we look at your goals, your cash flow, your protection needs, and your long-term legacy strategy. Then we determine whether this is a fit for you. Because again, this is not for everybody. You need at least consistent income. You need a commitment to building wealth. You need discipline to save and a serious mindset. If that's you, then this could be a powerful fit. If you're not fully there yet, that's okay too. There may still be a bridge strategy to help you get started and grow into it over time. Now, why did I create this blueprint? For years, I watched people follow the traditional path, work hard, save in a 401k, pay your taxes, and hope the market is up when you're ready to retire. But I realized that this path was designed to benefit the institutions and not the individuals. The banks get your deposits, the government gets your future taxes, and you get all the risk. I created the flip strategy to flip the script, to give you the same tools the 1% use to stay wealthy, protected, and in control. Now, is this move the right move for you? That's a good question. The flip strategy is a powerful tool, but it's not for everyone. We can only work with individuals who are ready for this level of financial engineering. And for you to work with us, just like I said before, you need all this to make everything work out. Now, if you're not ready for this right now, we could set up something simple for you, which means we could secure you a convertible term and get the protection your family needs today at a fraction of the cost. We lock in your insurability while you're still young and healthy, right? Because the older you get, you never know what else could happen, right? Now, we focus on earning mode, right? Which means you use the peace of mind from your protection to go all in on your career or business, increase your cash flow to the next level. And lastly, we convert that into the flip system. Once your income is consistent and your savings is up, convert your term policy into the flip system with no medical check required. Now, if you qualify and move forward with us, here's what you will receive: your custom flip strategy design, your annual review and optimization, access to our private banking team, legacy planning guidance, and emergency access automation setup. And for those who book a strategy session and qualify, we also have bonus gifts available, including the flip strategy guide, a tax-free calculator, the banker's mindset audio series, and a legacy planning checklist. So today's goal is simple: no pressure, no hype, no confusion, just clarity. And if you stay to this part of the video, all you can do is just comment legacy, wealth, or send me a message and I'll send you your special gift. Now, if you book a strategy session with us today, we'll waive all those fees for you. And we'll book you for a complimentary strategy session just to see if you qualify. And if you want to book your strategy session, just comment wealth, comment legacy in the chat, or send me a message and I'll reach out to you. Now, this is a story of a father who secured his family's future while building a private lending system for his children's education and his own retirement. Now, this man had 3 policies: one dedicated policy for each child, providing immediate liquidity and guaranteed legacy. And he also had one max funded IUL, focused on high growth potential and tax-free retirement income with downside protection. And lastly, he had a private banking system, which means he had the ability to borrow against his own wealth for major expenses without the bank's approval. Now, what you will learn throughout this web class today is the 4 pillars of the wealth strategy, right? Number 1 is the guaranteed protection, which is the 0% floor, which means you never lose your money. Number 2 is the tax immunity, which means growth and distribution are 100% tax-free under the IRS codes 7702 and 101. And you also get number 3, which is 48 to 72 hours access to your money, which is no bank application, no credit checks, no purpose of your loan questions, total capital control whenever you need it. And lastly is legacy control, which means there's a transfer of wealth to the next generation and instantly and privately bypassing probate. Now, these are all the success stories of people that worked with us. Sarah says the flip strategy completely changed how I look at my business capital. And now my own bank and the tax benefits are incredible. Number 2, Michael. I was skeptical at first, but after seeing the math, it was a no-brainer. This is the missing piece in my wealth building strategy. And number 3, Elena. She was like, finally, a financial plan that actually makes sense and gives me control. No more waiting for bank approval or dealing with high interests. Now, let's do a self assessment. Where are you at? What is your world score? Do you have guaranteed flow in any of your investments? No? Can you access your capital within 48 hours without any penalties? And can you guarantee 100% growth tax-free environment for your money? And lastly, you borrow from yourself and become your own bank? Or does your family have a generational legacy in place? If not, let's fix the gap in your strategy right now. And for educational purposes, these are 5 books that I recommend. And these are the books that helped me create this strategy as well, and which helped me and my family. The Retirement Miracle is a good book by Patrick Kelly. The Money Wealth Life Insurance, which is a good book by Jake Thompson. The Family Bank Strategy, which is a good book by David Thompson. And The Wealthy Physician, which is a good book by Chase Neely. And lastly, The Richest Man in Babylon, a good book by John S. Clayson, which helps with a mindset of saving. And these are all excerpts from the books. The Richest Man in Babylon, John S. Clayson, is a classic. It teaches the most important rule of wealth, which is a part of all you earn is yours to keep. Most people pay everyone else first, IRS, banks, utilities, but they keep nothing. They show you how to pay yourself first, which is a good book. The Retirement Miracle, it shows you achieving tax-free growth, tax-free income without risk. The Family Bank, which shows you Money World Life Insurance. Thompson explains how to use high cash value insurance as a personal bank. Instead of paying interest to a bank, you pay to yourself, keeping your capital in motion. And lastly, Dave Thompson in the Family Bank Strategy talks about the framework for generational wealth. Learn how to fund your children's education, business ventures, and homes through your own family's private banking system. And lastly, The Wealthy Physician by Chase Neely. He essentially, for high income professionals who faces unique challenges, high taxes and high liabilities, gives you asset protection, shields your wealth from frivolous lawsuits and creditors, gives you tax efficiency, reduces your effective tax rate through legal IRS approved structures, and it gives you lifestyle preservation, ensuring your family's standards of living is never compromised. Now, the big question is here. We've come to the end of our web class. Are you going to keep playing the bank's rules, or are you ready to become your own bank? If you want, either you send me a message or you comment wealth or legacy in the chat. And the next steps will be for us to schedule an appointment. We complete a brief financial questionnaire and we design your custom blueprint for the flip strategy. Thank you, and I'll see you soon. Bye-bye.